God eftermiddag. Jag heter Katrine Kielos. Jag är ekonomijournalist på EFN och kolumnist för Svenska Dagbladet Näringsliv. Och det är med stor glädje som jag kommer försöka leda er genom programmet den här eftermiddagen. And due to our international guests, I will now switch over to English for the first session, the theme of which is navigating global uncertainty. But, as the Spanish poet wrote, there is no path. The path is always made by walking. There is no established route through shifting geopolitics, new technologies, and this unstable macro order. But hopefully, that doesn't leave us without direction, or at least some lively and good discussions about where we should head and why. So, let's begin. It's my pleasure to welcome Johan Torgeby, President and CEO of SEB and the current Chairman of Finance Sweden, who will officially open this meeting.
Thank you, Katrine. And also I would like to extend a warm welcome to friends and family and dear competitors and colleagues. This is always a special day on the annual agenda, and I have now the luxury of being back in the form of chair. It was 6 or 7 years ago, 6 at least, and I'll thank Jens of Swedbank to have done it for the last couple or 3 years. So, to kick off today, I thought I'd just share a few more or less personal reflections on where we are and where we go. And the first one is, I think, I speak for many of us, the increased polarization about the views on banking. And I'm thinking now about external interests like politicians, the general parts of society, our customers, our owners, us working in the industry, on the question that I so often get, why are you good for society? What's your role in society? And despite the very good work of the not Swedish Bankers Association, Finance Sweden. I do think this is an lasting problem and we can never stop. So I'm going to share another perspective, which I think is less common, on what do banks do in terms of flicking the slide to the next one. Oh. So, my first statement is a little bit of cockiness and a little bit of humbleness. Banks are necessary for prosperous societies, but certainly not sufficient. Sometimes I find myself describing myself as a waiter. I'm not the master chef. Banks are not creating the iPhone. We're not doing the Ericsson systems. We're not creating Spotify. But without us, they would not be facilitated. We are the facilitator to make sure that society runs as efficient as possibly can. And I therefore like to push the green button very hard and have another perspective. We talk about growth. I'm an economist. GDP is absolutely the most common way to define growth. But it's actually not GDP we want to achieve. So therefore, I'd like to plot here GDP versus the UN-sponsored happiness index, where you not only ask a country or a nation, how prosperous are you in terms of consumption, investment, export, government spending, but how happy is the population after where you spend. Thank you. And it's very, very clear that there's a high exponential correlation that if you manage to have the traditional measure of economic prosperity, you also have a high correlation with happiness. Happiness in the UN is, of course, do you have healthcare? What's infrastructure like? Do you have trust in your institutions? It's really the things you want to achieve by having a prosperous society. Now I then answer the question, so what have you done for me lately, dear banker? We are now in a very precarious situation. Sweden has had the lowest GDP growth since COVID, resulting in the inflation shock and the very sharp interest rates rising. and now we have one of the highest expected GDP projections for 2026 and 2027. So a pretty harsh and nice turnaround for us in this country, much dependent on the high exposure to floating rates. And this is my very technical answer. This is what we do. This is the GDP equation. Consumption plus government spending plus investment plus export minus import. This is what we're talking about. Where are you in this? So rather than saying we are great at lending, capital formation, we work in the capital markets, look at it from the GDP equation. So what do we do to facilitate any of this? Consumption, and I like to think about this. Turn one of these off and you'll see an effect in society. Consumption is dependent on payments, cards, cross-border payments, consumer lending, and no new innovations like Apple Pay, but the closest to heart is Swish. Turn one of these off, and you'll see how much consumption you have, and therefore the incredible facilitation value we have. And consumption, as you know, is the largest net contributor to growth. And by the way, the one lacking in Sweden right now. Investments, that's right up our alley. Savings, investment, capital formation, IPOs, equity capital markets, debt capital markets. Asking people with more money than they need to channel it to people and companies with less money than they desire. That's what we do, making sure that intermediation is done in the most seamless manner. This is, of course, corporate lending, household mortgages. We lend for investing in your home, commercial real estate. And I was thinking, this is so much banking, although it's not us buying or building the property, we're making it happen. We're one integral part in that chain. Export and import, cross-border trade, trade finance, FX markets, working capital. And then lastly, of course, government spending. Government bonds, the largest asset class in the world, is done by someone. There's someone investing in government bonds in order for the ever-increasing problem of too high government indebtedness to be a macroeconomic instability factor for the future. That's financial intermediaries. So regardless of where you are in this value chain, I think it's fair to say that we will continue to try to speak about our role in society. This is just another way from what is more commonly spoken about in media with a politician, that we actually power a little bit of the infrastructure for things to happen. Another way is, of course, to answer the question, so where are you and who are you financing? And this is a little bit of made-up, homemade slide. The capital supply ladder in Europe. This also goes to the recent discussions in Brussels, where Sweden is singled out as a role model, a poster child for what we can do in Europe, that Europe is not all bad when you compare Europe to the US. But I like to do it this. So how often have you not heard a startup or a single individual who wants to create a company ask for a bank loan and we decline because there's no proven business model, no proven track record, no proven cash flow, no path to repay the contractual obligation of borrowing, and trying to explain you need equity, you don't need debt. And this is how companies in my book are started. You know what the number one source for the 40 to 70,000 new companies we start every year in this country is? It's mortgages. It's actually self-finance, where you ask your mother, your father, your friend, your spouse, or a friend to give you that first 100,000 kronor or 1 million kronor to put something on paper to start your journey. That is not venture capital or angel investors or banks. And the 70,000 newly started one is from operational cash flow or cash at hand. Or you lever up. It's most commonly that you lever up your home. Angel investors, very, very important, but super hard to find. If you don't live around Stureplan, the city center, you don't really know who they are. If you sit where I come from, Åhus, and you said, I'd like to find an angel investor, which is typically a very, very successful entrepreneur who has enormous skill and insight and made some money to help you scale something from nothing to something. So this is, of course, a very tricky area. It's super important because then you get into the institutional first side, early stage investment, venture cap. My point is, if we are talking around the financial market and banking, how do we get capital formation in the form of new companies established and scaled? This is where we should work. not thinking about the margin on a particular very established banking product. That won't help. It's here to devise very credible strategies, how to make individuals finance new companies, how to get angel investors super early, super high risk capital. And you see here I plotted it on expected return versus investment risk. These are huge risk, but therefore also outscaled expected returns, but at a huge risk. And you need an adequate risk-adjusted return, not the 3 or 4% that we would charge to finance one of these things. That is not an adequate expected return for this risk. Then we have the big mother of the market, the developing of companies. Private equity, of course, 1.1 trillion euros outstanding, the biggest one of all, the public equity market. We then have a high-yield bond market, which is still too small to matter, but it's been around for 30, 40 years. And then, of course, in Europe, an emerging, but still small, competitor to typical high yield, to typical leverage buyouts, and that's the private debt market now also coming into less risky. And then, of course, the investment grade bond market, a very established 1.6 trillion, and then bank loans, the way we finance ourselves. Or in order to finance our companies, which is a very large market in Europe. Now, and then you have the two safest, that's the bonds that we issue, often secured, and then the government bond. My point is really, when you think about what you want to do, if it's greening of the economy, if it's financing resilience, defense, you got to know, is it a startup, is it entrepreneurs, innovation I want to finance? Or is it the build out of a very established investment grade company that want to double their size because there are more demand for their products? Which bucket are you designing for what? And I think it's the Bankers Association, Sweden Finance Sweden, we just changed the name in English, that we as bankers, we sit at the very epicenter of this whole value chain. Not all of us work with all of these, but all of us in this room work with some of these. And this is really how I think we should talk about developing the financial markets further. Now to the European versus US. I recently did this. We just plot them up and then we put in the US numbers. And to make it simple, you can just see much, much deeper capital markets in whatever shape and form you look, except for one. Here's the multiple. Venture capital, 5.5 times as much. Private equity, 3.1 times as much, as well as one area where the US does not beat Europe, bank lending. They have roughly half of the outstanding bank loans to corporates as we have in Europe. Now, two conclusions. We know this, that 70% of the American economy is financed by capital markets. 70% of the European economy is financed by bank loans. And that is, of course, when we find ourselves trying to protect and develop something that works very well here, that the lending side is actually powering Europe, not the capital market side. And therefore, banks needs to be absolutely seen as a part of the solution around getting the wheels of Europe to spin much greater than the US, which has a more dependence on the capital markets. Now, very quickly, Sweden is not Europe. So as you probably know, Sweden is on par with the US, much better than Europe. So now we do Sweden, which has much higher number of IPOs per capita. US is way ahead of Europe, but Sweden is doing very well. Pension, number one source of risk assets investable in the private equity space, the private asset space, and the public equity market. Sweden has an enormous situation. Shy of the US, because I don't think AP funds are included, otherwise we would have been similar, but way, way higher, 3 times as high of access to capital pools for the pensions that we either will receive or not require to receive because we don't have a shakeout in the pension system. Household net worth. So the net worth compared to your disposable income, extremely high because of the same reason. We've invested in equity markets, and year in and year out with the compounded power of interest, you have a very high indebtedness, but even higher gross asset. And even on net basis, we have a very rich population because we invest a lot in productive investments in the long term. And this is, of course, the flip side. We don't like our deposits. For good or bad, Sweden has, like the US, one of the lowest propensities of deposit. In this context, it's a good thing. This is the number one opportunity for Europe, that almost double amount of the total assets that the household have, they have in their bank accounts at 0 interest rate. For a developing of capital formation and risk capital, that's the mother that needs to be channeled into something different than just bank deposit. Then we all want the bank deposits so we can find ourselves. But one loan to depot, we're pretty much there. The rest we can put in funds and equity, savings and investments, and we can help our clients get a more productive and more attractive return. Then we do, this is capital markets. Then we do banking very quickly. I think it is very impressive to look where we stand now and also the development over the last 10 years of Swedish banking. Start with cost income, Nordic banks versus European average, way below. We're reaching 40%, many of us in the room. Extremely cost efficient. Very profitable, significantly higher return on equity on average compared to Europe, despite having significant more capital, with capital CET1 ratios closer to 20 than 15%, still generating a good return on equity. And then maybe the number one reason, not that we are smarter than every other banker in the world, we have an excellent benign banking market as clients of us tend to pay their bills and their loans. Credit losses are extremely low. And this is for me very much to do with the 90s crisis, and we redid the whole system, and the moral obligation, not only the contractual, but the moral obligation to pay my bills is very, very high, and we are all very lucky that we have such a formidable customer base that makes us use less capital than others in order to conduct our business. Conclusion, before we conclude, I think we are in a remarkably strong position. The Finance Sweden, I think, has one that we jointly protect and promote our way of doing banking business because it works. Thank you very much.